What's up, everybody? Welcome back to the channel. Um, First, before anything, I hope you guys had a great Thanksgiving. Um, I know I did. I had a lot of family come over, more than expected, really. And we had a really good time around family, around friends, new friends, old friends. Um, but overall, a really good turnout. Um, so I want to get to what we were looking at this past week. And I hope that everything that I'm going through in one way or another, some shape or form, is helping somebody out there kind of understand the market w- and come to like just really realize what kind of impact holidays have, um, what the media puts out there, what's going on around the world, government with wars, with everything like that. Everything that you see happening around the world right now is in one way, shape, or form attached to the market. Whether you want to believe that or you don't want to believe that. Um, I'm someone that believes that it is attached and it has a lot of impact. Um, but just keep that in mind moving forward. That's just kind of something that I've been over the past, my experience of, 2 years plus, things that have happened um, in the world have, and you guys have seen this before in either movies or, with different things that have happened in the past, depending on, what age group we're talking about here, but you guys have seen enough to kind of see how things that are happening around the world have some, like I said, some sort of impact on the markets, right? So just keep that in mind moving forward. But anyways, let's get down to business. So we were trading last week. I only took two trades, if I remember correctly. I'll go ahead and pull them up. I have them up here in my chart, but there were really this week, because it was Thanksgiving week and we have a holiday, which was Thanksgiving on Thursday. I don't like to hold trades, or and also I don't like to trade the day of a bank holiday in the United States, simply because of the fact that, number one, there's not going to be a lot of movement. Number two, if there is some kind of movement, it's very lethargic, which means that it's very slow. It doesn't move quick and snap to price where it needs to go. And there's a lot of uncertainty, right? Because it's a holiday, banks are going to be closed. They are going to close the markets, and then with that being said, you don't want to be stuck in a trade having to wait with anticipation while you're spending time with your family. Hey, double checking your phone every couple of minutes, even though that the markets are closed and they're really not moving. You tend to want to pull out your phone and want to look at the markets, right? um, so to avoid that whole mess, and to avoid uncertainty, and to avoid taking really an unnecessary loss, I highly recommend do not trade on any kind of bank holiday, right? So Monday, this is kind of the chart that I wanted to kind of start with, because I do always start with the top down analysis. And I kind of wanted to give you guys an idea of what I was looking at on Monday. Well, really, what Sunday looked like whenever it opened, right? Because we spoke about a new weekly opening gap. And what a new weekly opening gap is, I don't remember explaining it deep into detail the last couple of videos. But all new weekly opening gap, or NWOG, is the gap from when Friday close, where that candle closes, and you can hover over your candle. So let's say this candle right here, right? If you hover over this candle, and if you look at these OHLC, that's open, high, low, and close, right? So if you hover over that, and if you look at those numbers up there, if you look at the close, it says 16011.00, right? That's going to be the price that, when that candle closed, that is the price that it was at whenever that candle completely closed to open up the next candle, right? And to some of the new people here, just bear with me. I will be making a video here maybe in the next couple of weeks, just kind of explaining how to read charts a little bit easier, what to do, I use TradingView. Obviously, you guys can see that, but there's other options out there. But not to get off too much off topic, I will, like I said, be making a quick little basics video just to kind of get you guys introduced into trading and how I was introduced and brought into the markets, right? But moving forward, like I was saying, if you hover over those candles, you'll be able to see the open, the high, the low, and the close. I think this is something that TradingView just kind of automatically sets up here. There's no indicator or anything like that you have to necessarily open or attach to your screen, right? But with that being said, if that's really all what new weekly opening gap is. And I'll zoom in a little bit so you guys can see it where I marked that up. But I'm going to hit this replay button, and that's going to take me back to what we were looking at on Friday before the Monday candle opened up, right? So this is what the market really looked like on Friday close, right? Before Monday opened, before we knew anything, where you want to kind of see where your direction is going to be pulled towards, right? I talked about this on my Instagram and I think I marked it up and I put it on my story that because we've been up so high, we've been in a bullish trend. You notice that we've been breaking highs here. That was a high that was, very much well respected, and it just completely destroyed it right here with this blue candle, with this bullish candle. It came back, almost acted as a breaker, and then it just continued on higher, right? We were trying to see if this high was going to get broken. In fact, it did get broken, and how much higher can we go above that, right? So because this was Friday, you can expect price to either one, kind of let some steam off and come back down into this bullish candle or a BISI fair value gap. We could see price come back down, take this low as liquidity, dip into at least 50% of this gap, and then continue on higher, right? We don't know that. We don't know that until Monday morning, or let play, afternoon on Sunday, see what it wants to do before during London session, before New York session on Monday. Or two, we could see this candle completely break this guy. And what I was eyeing was this right here, this volume imbalance. So that's how I determine where price is gonna want to go, right? Do we want to, you kind of got to give yourself an idea of thinking like, well, if this, then that, right? So if price does this, then we can expect that, right? Because no one can really determine what the market is going to give us, right? We have to kind of go based off of what it's printing out at that moment, right? So we have to kind of understand what the candlesticks are doing. So like I said, I didn't know, because on Friday we kind of closed up here. I didn't know if we were wanting to come back down, dip, take these lows, dip into this as a discount down here below the 50% of this candle, and then continue higher to take this high. Or we could just very well just continue on high and tap into this volume imbalance. Regardless, I felt like we were coming back up to this zone. So I'm going to go ahead and take off the replay, just that way we know that in fact it did just decide to go up, right? So let me go ahead and show you guys. I had my markings hidden, but I'm going to go ahead and unlock those now so you guys can take a look at what my markups were. So on Monday, I marked up this. Number one, we have highs right here. If you look at this blue candle, there are people's stop losses. So if you were a seller, right, naturally, if you're a seller right here, if you caught some kind of this move going down, someone would say, well, people's stop loss would be here. Why? Because that for them shows as some sort of resistance, right? So naturally, you would expect people to put a stop loss here if you're in a sell, right? Because you don't want it. You want to see that as some sort of like safe haven, right? People see that. So what I did is I see that as stops, which is exactly what it is. So we have buy side liquidity here. There's liquidity sitting right there. And not only that, you got that in confluence with the volume imbalance. And this is where Monday I had set this arrow to show you guys, let's just mark it and see what happens. Let me go to, and you notice that it completely went right to that price. Let me go ahead and go down to a lower time frame so you guys can see what I'm talking about and give you guys an example of what NWOG is. Let me show you guys. Right here. This is where price was. So let me go ahead and hide my markings again so it's a little bit easier to see. But this was Monday. You notice at the very bottom of my screen here, whenever I hover over the cursor, it says Monday, right? 12 a.m. So before that, what I'm looking at whenever Sunday opens is I want to see where, if you look at the bottom again on the cursor, Thursday, Friday, that's where Friday, 6 a.m., 12, 1, 2, 3, and then 4. So Friday closed somewhere right about right here. And then Monday opened up somewhere. You notice how the candles look a little bit different. If you zoom in a little bit more, I don't remember if I can see it on the 15-minute, but we can double check. Make this a little bit easier. Right here. 5 minutes. Make sure I'm teaching you guys the right week. Here we go. And I know there's so many easier ways to do this, but I want to show you just this way so we can go ahead and just make it easier. Let's see. Awesome. So this is what the new weekly opening gap was. So I had marked it right here. You can see NWOG, right? This gap was, and if I can show you here, let me go down to the 1 minute so it may be a little bit easier to see. Yeah. So I have it a little overlapped, but really it's from right here. So if you look at the cursor at the very bottom, it says Friday, right? The 17th at 4:59. So that's when market closed. If I hover over that candlestick, you'll notice at the very top where we were talking about earlier. Let me hover over that candlestick. The close was 15,874 and a quarter, right? So that's where I placed my close right there, because that's where Friday closed. That's what's going to be the anchor point for Sunday when it opens, to see how much of a gap it's going to have, right? So if you look here at the next candlestick from here, let me see if you guys can, you can actually see like a whole void right there. But if you look at the very bottom, let me go ahead and get this out of the way. That right there is Friday at 4:59, and then this is Sunday 6 p.m. when markets trading again. So this gap right here, the close of this and the opening of this, for me, as I know it, is considered a new weekly opening gap, right? And why is that such an important gap, right? So from experience, and if you do this and mark this up every single week on your trading view or whatever chart you're using, if you mark that up and pay attention to how it plays out throughout the week and how it reacts around those prices, number one, I've seen it act as a magnet. So I've seen it where it comes back and then reacts to the new weekly opening gap and then flies away completely, right? Just completely, if it's under or over, right? We want to pay attention to that as well. And I've seen it act as an area where it could potentially return multiple times throughout the week. So I'll give you an example of what I'm talking about here soon. And again, there's, you guys can take a look at this on your own charts. If you don't believe me, you can go back into your charts, mark it up, go back and take a look at it and see how price reacts to those areas, right? So let me go back up to the 5 minutes so it's a little bit easier to see. I'm going to exit replay mode and I'm going to go into my trades to see what we did and how I traded this week. what my analysis was and everything like that. So getting started, this again, we didn't know other than the initial daily chart when we were looking at, hey, do we want to go higher? Do we want to go lower? And then the highs that I marked as well as the volume imbalance, right, from the daily chart. So that's where my attention was. So if you look at the very bottom here, you'll be able to see the time when all this was happening. So new weekly opening gap. This was Sunday, 6 p.m. We go all the way up to 1 a.m., which is right here. It's still underneath the new weekly opening gap. At that point, I'm not really too much concerned with what price is doing. I really want to see what price does in the morning during New York session. So if you look at the time at the very bottom, I do have my time set to New York local time. I think I've talked about this before. I'm in Houston, but I always set my time to New York local time. This is something I've learned from ICT and his videos. If you go over to his videos and you watch 2022 mentorship, I've watched 2022 and also 2023. But he does explain the New York timing over on the 2022 mentorship. And the reason for that is that way I'm in tune with New York's time. But moving forward, if you look here, this is pre New York session. You can kind of see 5 a.m., 6 at the bottom, 4, 7, 7. Here we go. Right before this, I think there was news. If I'm not mistaken, I think it was, I'm not going to lie to you guys. Let me take a look. What's that, November? And I have my pup inside my room, so it's a little cold here in Houston, so I had to bring him inside. So if you hear him snoring, that's him. Please excuse him. Yeah, that was the 20th. So on the 20th in the morning, did we have any news? Let me make sure, because I don't want to lie to you guys. Let's go to November 20th. I think I was on the right. Yeah, I don't see any news. It would appear somewhere right here, but I don't see any, like, these red folders. To me, those are high impact news drivers. What that means is those, I don't like to trade during news. I would prefer to trade 30 minutes after news, or just not trade at all, because the markets can do some pretty crazy things. It can get pretty animated, and you don't want to be involved in something like that when it can go against you and you could just take an unnecessary loss. But back to Monday, I don't see any news for Monday. So there was no reason for this candle to have been that crazy. But if you pay attention, this is the top of the new weekly opening gap, right? Look at what it did. So it was doing all this mumbo jumbo, it was playing around above. Right at 8 a.m., 7, it started kind of playing around the top of the new weekly opening gap, which is right here. You see that this area in between right here. And look at how what time? Right at 9:30, which is the open, it respected perfectly. And what did it do? It created, first and foremost, it created this BISI, right, fair value gap. And it came back in, could have got in here, came right back down, could have got in here. But because it was the open, I didn't want to be involved, because number one, it could have just completely destroyed that and, sold off. But if you guys can see, this is the new weekly opening gap react right here. It's reacting to that right there, and it's respecting it. So when it created this big candle, I was just sitting back. I just wanted to kind of see what price was doing. I didn't have any intentions of getting in at that moment. But I'm going to show you my trade. After it created this huge gap, this huge push up, I wanted to see, I remember I had this volume imbalance marked up. This is what this gray zone is. That's from like way, you can see it's like way, 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 way back. but I still had it marked up and I wanted to see how it would react, right? So if we go back down to a 1 minute time frame, all I did was just switch screens, guys. So everything is still the same. There's nothing that I'm hiding or anything like that. It's just going from a 5 minute right here. I'm switching over to another window that has a 1 minute time frame. That way it's a little bit easier for me to explain and kind of save you guys a little bit of time when you're watching these videos. But back to the business right here, I kind of, when it create, this is that big candle that it created during the open right here. So again, I wasn't too concerned with jumping in just yet because it could easily just continue going higher. I don't know that. Normally my rule consists of waiting until after 9:30, which 9:30 was that gap with this bullish move right there. That was 9:30. When I see volatility like that, I don't want to get in right away. So my rule normally is waiting after 9:30 to see what price is doing, and two, potentially finding an entry after 10 a.m., which is my sweet spot for me. I've been looking at all kinds of trades after that time, and lately they've been working out in my favor, right? If you guys want to go back and look at my other videos, I do take trades around those times, unless something else presents itself, right? So let me see. This is where 10 o'clock was right here. That's where normally I would try to find to see, hey, is there some kind of entry that I can take? When it started doing all these rejections right here, all these wicks, I kind of started paying attention a little bit more because I knew that we already, so the people who have been making money the most are the buyers, right? So if you notice, since 12 a.m., if you look down here at the bottom, the price has just been consistently climbing and climbing and climbing and climbing and climbing, and not to mention climbing and then leaving some sort of, again, if you're a buyer in this market, your stop losses is what I'm potentially aiming for, right? Either here, here, here. If you're a buyer, your stop loss would be here, here, and that just comes natural, right? That just comes natural to a lot of traders. When if you were buying here, you would want to put your stop loss somewhere here. Heck, you may even want to go all the way even down here and see, hey, I just want to give it a little bit of wiggle room, right? But that's just a mindset that people have. They want to protect their loss naturally right underneath the next area or the next zone, right? Or the next low or the next high, just depending if you're buyer or seller. So I was seeing that it's already been in such a bullish momentum all morning. Where are they gonna target these traders? You know what I mean? Where's the next pool of liquidity? Where are people laying their stop losses at? If you're a buyer, where's the nearest pool of liquidity? Where's the nearest area that buyers would put their stop loss? Is basically what I'm explaining. If you're a buyer in this market and you just had this huge run up and then this one dipped, you had another huge run up, where would you put your stop loss if you got this entry? You would put your stop loss here. You could put it right here. You could put it right here. So that's where I'm eyeing the market, right? Normally in the morning, markets tend to reverse after taking some sort of liquidity stop or doing a liquidity run, right? So I was kind of waiting to see, hey, is this market going to give me some kind of sell? I did get in pretty aggressive in this trade. This was my entry here. Let me zoom in a little bit. I know it's kind of hard to see, but I'm going to show you exactly what I was seeing whenever I was watching the markets. You may not see it here because the candle has already printed, but I hate that this shows like that. Let me go ahead and move this back a little bit so you guys can actually take a look at what I'm talking about. This was my entry. I did not take this entry. This would have been a pyramid entry, which means that you would have just put, this would have been my original entry. A pyramid entry is just a secondary entry that you could have entered with a smaller position. That's all that means. It's just another entry opportunity. If you didn't get into this one, you could have gotten in this one, right? There's no perfect entry. you, like I said, you could manage and enter in a market as long as it's respecting what your narrative is, right? So let me play this back so you guys can see what I saw whenever I was getting involved in this market. So I started seeing all these rejections, and it just so happens that we were already at 10 a.m. So, which is my trading time. I normally trade between 10 a.m. New York local market time and 11 a.m., which would be 9 a.m. to 10 a.m. here in Houston. But right here, this candle, I'm gonna go ahead and forward play that so you guys can see what I was looking at. Let me go forward one. You see that huge push down, right? To many, that may not be considered a huge push down, and that's why I consider this a very aggressive entry, because normally I'm looking, you see this blue candle right here, how it's just exploded up. That's kind of what I'm looking for whenever it's doing something like that, right? So it wasn't as strong as this, but because we have already been in such a bullish market all morning, I was looking for some way to get into some shorts and target the next low, especially after that 9:30 open, which was this huge move up. Um, but after I saw that bearish candle right here get created, I marked this up while I was on my phone as a gap. And what I wanted to see was to see if the next candle was going to come up, fill this. If you can see this, there's a gap right here. It hasn't, I guess, fully been created until the next candle closes underneath. But I wanted to see if price was going to give me some kind of entry to go short within this fair value gap. And if I did see an entry, where was I going to target, right? My target was going to be this low right here. Why that low? People want to know, well, why that low? What did you see that made you confident in targeting that low? Why didn't you just take a 1-to-1 and hit maybe this fair value gap? That's a very good question, because I wanted to see price come all the way back down here, but I didn't have that expectation. I didn't feel 100% reaching it all the way down here. Otherwise, I would have pulled my take profit all the way down here. But because the week before I was taking some trades, and the trades that I was taking, I felt like the target was a bit too large for my appetite. So the trade just reversed against me almost all week. I took multiple trades, and every trade that I was taking, it was coming back and taking me out, because it would have definitely hit 1-to-1s last week. Absolutely would have hit 1-to-1s, and I would have had a winning week, right? But because I got stung so many times, and then you create those mental scars in the market where you're like, well, you know what? Last week, my target was a little bit too high. Let me start aiming for a smaller target, or to the nearest pool of liquidity, right? So we put and implemented that this week with these trades. So instead of targeting this low, which would have never tapped or reached its target, instead I just started reaching for, I guess you can say, higher probability targets, right? Because you're more probable to hit this next pool of liquidity than to come all the way down here, right? And who's to say that, maybe this gap is meant to be open because, one, we just rejected off of the new weekly opening gap. That may be the week's ultimate low, right? We don't know that. We don't know if they want to keep this gap completely open. So to be safe, you want to go ahead and reach for the next high probability target, which for me, it was this low, right? So with that being said, I was waiting to see if I had some sort of entry when it came back into here. Let me go ahead and play it forward one more time. And right there, you can see right away where it opened, it came right back in. And that's where I took my entry. That's why I have this guy kind of pulled up over all the way over here. So that was the original entry right there. Let me go ahead and continue playing it so you guys can take a look at it. It did play around a little bit. We went into a little bit of drawdown, not too much. It did respect, these candles didn't close above anywhere near this zone. Otherwise, I would have been a little nervous if they would have closed above. And honestly, I probably wouldn't have let it hit my stop loss. I would have probably just closed it right then and there. But the fact that it just rejected, came back down and closed down here, I was okay with that. I felt a little bit more confident. This candle right here is a fair value gap. That would have been another perfect entry. That's why I marked it up here. I think I posted this on my Instagram as well. I marked that gap. I, set it just like that, and I sent it out onto my story. And the rest is history, man. It just played around a little bit. It did give us that entry right here. That could have been another pyramid entry. I didn't take it. I was just wanted to have one position and to see if it would hit my target. And sure enough, right here, it did get, it did reach that target. So that was Monday's trade. Once it hit my take profit, I promise you, I'm not even going to lie to you guys. I closed out of the app. I didn't watch it for the rest of the day. I was completely okay with just taking that win. Sometimes it just takes one good trade and you just got to get out of the markets and leave it at that, because you don't want to go back into the trade and give back everything you just made, right? And at that point, you're going to have a gambler's mindset, and you're going to enter into the market just because you want to be involved. You're going to have some type of winning high, right? So when you take a nice win and you're kind of almost in disbelief, you're like, man, I did really good. Like, that was really fast. I won some money like pretty quick. Like, man, let me go back in there and do it again. You don't want to do that. And that's part of the trading psychology that I want to talk about at the end of this video. But let me go ahead and move on to the next trade on Tuesday, right? So let me zoom out a little bit here so we can take a look at what we were looking at on Tuesday. Because remember, we start with a higher time frame analysis and see where we're at. So let me see, let me go ahead and clear this out so you guys can take a better look at it. Monday, Tuesday. So Tuesday was this candle right here. On Tuesday, let me see, did we tap on it on Monday? No. On Monday, all we did was just completely go higher. And then we got very close. If you look here at this candle, we got very close to, we only took this high right here. If you look at this candle, this blue candle right here, and this blue candle was wick, if you look at my cursor, this one took out this one. If you had a stop right here in sales, this high right here, this wick would have taken you out if you had stopped right there. If you look at it, I know it's very hard to see, but if you look at the line across from left to right, the right one, which is this blue wick, completely took them out. You can tell right there. It's small, but it took them out. So on Tuesday, this is the high that I'm talking about right there. So let me go ahead and show you guys where I marked up. You see how this high is a little bit higher than this one? They just took them out, came down, and then went right back up, and then tapped into this fair value, this this volume imbalance. All right. So this is what I have marked up right here. This arrow, this line is this one's just in a daily time frame, so you guys can see what I was talking about and where I wanted to reach. And if you look at right there, BSL, that's buy side liquidity, it's this chart right here. I know it's right there, buy side liquidity. This is just, it looks like more candles because it's just in a smaller time frame. But that is, and you can see here, this was Monday's new weekly opening gap, bullish move, our sell from Monday. Look at how it perfectly respected this daily volume imbalance from a while back. That one was from way back here. That's this one right here. This is just extended out in time, right? Look at the position that it has. Another buy. If you were in buys, you could have gotten in here, and then pyramided all the way up to this daily volume imbalance, which we had marked up right there. You could have potentially bought here and then rolled that all the way up into some pretty hefty profits, right? But like I said, I take one trade, call it a day, close the charts. So right here, this was Monday at 10:35 p.m. It tapped into our daily volume imbalance. The next day, where are we at? Right here. And if you look at the bottom, 5:40 a.m. I don't start looking at the markets until morning time, like 8:30. But after it tapped into the daily volume imbalance, you can just tell it just completely sold off. There are other silver bullet time frames that you can use. I don't use them. I think it's somewhere between like 3 and 4 in the morning, if I'm not mistaken. You could have potentially got into those trades if you're someone that wants a different hour to trade. We may cover it, we may not. It's not what I trade, so you won't hear it a lot from me. But if you, like I said, if you want to go into ICT's YouTube channel, he does explain that, where you could potentially get into trades like this. And if you're in fear of losing and missing out on those trades, just set alerts like these dotted lines right here. Those are alerts that go off on my phone when it reaches a certain place or a certain price. It'll alert you. It'll send you a text or some kind of notification on your phone. And then you can get involved in that way. But as far as me, I keep it simple. I wait until the morning time and then we go from there, right? So moving forward, Tuesday, I did not take any trades. So I have Monday's trade was right here. Tuesday's trade would have been amazing. It was a good move. I was not involved in it. You can see here, all this had already happened all after that volume imbalance had been tapped. So sometimes it's okay to just kind of watch price and not do anything, right? Sit on your hands, watch price, wait for another day. There's always another opportunity. You could have gotten involved in the PM session even, right? But Tuesday, we had a lot of news, I think, if I'm not mistaken. I think I had marked that, but it was more Canadian news. So we had another one at 10 a.m. It wasn't as high impact as we expected, but we did have this, which, could have, honestly, you could have used that to see what the market could have given you. But it being this time with this type of news, I don't feel too confident getting involved into the markets, because then you get this, right? Look at that. And this is, what time was that? 4:20. Do we even have news around that time? No. Look, there's nothing that could have told you, hey, like, there's no way you could have gotten involved in this type of move right here. Nothing like that. So this sell was it. It wasn't within my trading time plan, so I didn't take anything right there. It came right back down. Did it come back down to? No, it got pretty close to the new weekly opening gap, but it looks like what it did is we tapped into this daily volume imbalance and it came right back down to fill Monday's gap. Like I said, sometimes those gaps may not want to get filled right away. Remember how we were talking about Monday's gap right here, right? That was Monday's gap off of the new weekly opening gap. It flew up. Sometimes they're not going to want to fill those gaps right away, but it did fill it up on Tuesday. If you look here, it filled right there. You see that? So there's so many ways you can get involved with these markets, but Tuesday was a no for me. This right here, I don't like that. So let's just stay away from it. Go focus on something else. Go study, go back test, go do something else. If you missed a move, there's always going to be another move. Okay. And that's exactly what I did on Tuesday. Now, Wednesday, this was Wednesday's trade. Wednesday, this was that move all the way down from Tuesday. This was that ugly 2-wick, everybody, getting chopped up on Tuesday. And then this was a bit risky. And the reason why I say it was risky is because it's the day right before a holiday. So I did respect the risk that I was taking here with these two trades. But if you look at my risk to reward, it's a pretty respectable stop loss. So it's not something that you're gonna say, well, if I win, I'm winning 2 times more than what I'm losing here, what I'm risking at this point. Okay. So keep that in mind moving forward with these trades. So let's go to see what we were looking at on the daily, because remember, we always start on the daily. Tuesday, Wednesday. So this was Tuesday. So Tuesday's candle was a big sell candle. We didn't know if we were going to go up higher, if we were going to go lower. So all we want to do is just kind of wait to see what it's going to do. We have already on Tuesday tapped into this daily volume imbalance right here. If you look all the way towards your left, and you'll be able to see that from right all the way to the left on that dotted line where my cursor's at, we tapped into that daily volume imbalance, right? So if we look at that, that's this guy right here. Now, because we have already been tapped into that, where are you more likely to go? Let me go ahead and show you guys with the drawings on. So yes, Tuesday we tapped a little bit and we dropped back down, but on Wednesday we went up even higher. And I think, if I'm not mistaken, we had news. Yes, we had these news drivers right here. We had unemployment claims, core durable good orders, and durable good orders, I don't pay attention to what the news is. I just pay attention to whether are they high impact news drivers, medium impact news drivers, or low to no impact news drivers, which are the yellow folders, right? These have high impact. That means that there's going to be volatility, high volatility in the market. So the market's going to move pretty crazy. 10 a.m., we have another red folder. And I think that's about it. So we want to wait until that news passes. If you look here, that's when news hit at 8:30. Well, 8:30 on here is what it shows, because I have this set up to Houston time, but 9:30 New York local time, which was open, right? So it gave us that huge bull candle. It tapped right into or above, which was this. If you look at this wick right here, let me go ahead and hide this so you guys can take it. This wick right here, that's what this is. Again, this is on the 15-minute time frame. That's why it looks like that. It's broken down into, each candlestick is broken down, right? So I can break them down from daily, 1 hour, 15, but we'll go through that when we talk about the basics. For right now, we want to talk about this wick. This wick came back up, completely filled this daily volume imbalance, and then overlapped it, which is okay. And then it rejected right back down. If you look here, went up, and then this white candle, it came back down, opened right here, and then it continued down lower. So naturally, to me, that tells me, let me go back down into the lower time frame and see what that looks like. To me, that looks like, hey, that's a complete stop right there. Today we're going to turn around. We're going to turn around and we're going to go the other way. Why do I feel like that? Why do I see that? I felt and I understood and interpreted that because we have, number one, already completely filled a daily volume imbalance, which to me acts as a target reached, right? So now that it's reached there, and I put this on my Instagram story, I posted it just like this. I said, we already reached over that daily volume imbalance. Where do we want to head next? Right? Those were my exact words on my story. Where do we want to go next? Implying that going down is going to be the next move. Not to mention, look at all these orders that are buyers. Look at all these orders that are longs, that are buys, right? Stop loss here, stop loss at this low, stop loss at this. If you see, I have all these marked up. Stop loss right here, stop loss right here. People that are in buys right here have been winning all morning. The market's probably going to want to destroy somebody. And how are they going to destroy the people who have been winning? They are going to come back down and they are going to take these guys out, take these guys out. Do we want to do that today? maybe, maybe not. We just have to see what the narrative is going to give us. What kind of story is it giving us as the candlesticks print, right? So let's move forward. I'm on replay mode right now, and I'm going to show you exactly what I was looking at. So right here, if you look here, we already took that high. We filled that daily volume imbalance. And I said, where do we want to go next? So I was anticipating price going down lower and wanted to see how can I get involved in that market if it does, in fact, go lower. So when these candles came back down, it took some liquidity here, and I naturally expected price to come back up and then go back down. But because we left this huge gap right here from here to here, let me mark that up. From here to here, that candle right there, notice from that wick right here to this wick. I didn't want to just get in here, because then at that point I felt like I would be chasing price. And if I put my stop loss here, I would be taken out immediately, because it still has some kind of room to come back up here. And then we can also see that the blue candle could act as a inversion fair value gap, right? So let's take a look. I'm going to go ahead and play it forward one more time. So right there, we took this low out. Do we want to take any more lower? Right at this point, I'm waiting. If I was learning ICT a few months back, this would have been my entry right here, and I would have put my stop loss here. And let me show you why I didn't do that this time, because I've learned my lesson. That's exactly why, because we still have this open range right here, this open gap, fair value gap, a SIBI. I would have entered here, put my stop loss here, and I would have been taken out right there. That would have been an impulsive entry for me. I would have labeled that as an impulsive entry, which would have caused me to lose money, right? Maybe not a lot of money, because my stop loss is where it needs to be. And I did have, which is very important to have a stop loss. But with experience, you start to see things. Hey, wait. No, let's wait up a little bit, because I've seen this happen before. Let me just give it some time. It's always okay to give it just a little bit of extra time, because I would rather much get a better entry than to get in early as an impulse move and then lose. There's always going to be another trade. Remember that. Always going to be another trade, another opportunity. So let me play this forward for you guys. That right here was one entry. As soon as it tapped into this gap, I sold right there. If you look at this position, you see where that dot is, where this line is. That was my position to enter. My first entry was right here. As soon as it tapped into this fair value gap, my stop loss was above this high, right there. Not up here, not up here, not way up there, right here. Why right here? Because I don't want to extend my stop loss even more if I'm wrong. If I'm wrong, then I'm wrong. I take it. It is what it is, right? So this is my nearest high. That's where my stop loss is going to be. You notice this one, I did move up a little bit higher. Why did I do that? Because this candle, as soon as we tapped, if you look at this candle, I'm going to mark from the top to, you see where the fair value gap is. And just to kind of keep this very simple, I'm going to go ahead and eliminate these so you guys can take a look. Okay. Oh, me. I think that looks good. Okay. So why do I have my Fibonacci out? I'm going to explain to you guys. If you look at this fair value gap, right, that box that I had marked up as a fair value gap, as an open range to kind of see where my entries were going to be. If you look, I usually, not always, but I usually, whenever I see this big of a gap, I usually mark it with a fib to see where half of that is. Where's the 50%? And why do I do that? Because above 50%, if we're in sales like this, if we're looking for a sell opportunity, above 50% is a premium price. I want to sell at a premium price, right? a price that's high enough for me to be able to get in a very good position. When you buy something, you want to buy it at a discount, right? You want to buy it when it's on sale. You don't want to buy it when you got some new Jordans that came out, or a new car that came out, or whatever it is that you're into, right? A new camera, a new laptop, a new monitor. For this example, let's just use an iPhone, right? You see an iPhone come out and it's $1,000. You don't want to buy the iPhone when the price is higher, right? You don't want to buy, if an iPhone is $1,000, you don't want to buy it at $1,000. You would rather much wait until, hey, a couple of weeks went by, maybe they're having a sale, whatever, and that $1,000 iPhone is now $500 for whatever reason. You would rather much buy it when it's at a discount, right? So the same thing when you're selling it. So let's say you bought an iPhone for $1,000, and for whatever reason, it's a special edition iPhone. Over time, a couple of weeks later, that $1,000 iPhone is now worth $1,500. You want to sell it when it's at a premium price. You're going to sell it so you can gain a profit, right? So the same concept here. I'm going to sell whenever it's above 50% at a premium price. So once it tapped this 50%, that was my signal to get in at a premium price, which would have been at this higher, over that 50%. So if you see, that's where I marked up this position here. So let me go ahead and continue. I'm gonna let this play out for a little bit so you guys can take a look to see where price is going. So it would have been okay if you would have taken a 1-to-1, right? That's totally permissible. 1-to-1s will always pay out. But what I was targeting was this low. If you look here, this eye, that's what I'm eyeing. Why do I target this one? Because there's more liquidity here. There's stops here. There's every low, right? There's stops here. There's stops right there. There's stops right there. And there's potentially more stops here. But the fact that it's completely clean from here all the way across, that tells me that there's a lot of liquidity sitting right here that I could target as my take profit. This is where I would target. This is where I want to, if I was the market and if I wanted to hurt and destroy the traders that have been in buys, where could I destroy them? Right here. That's where their stops are. So if we let this play out, I had been holding this trade. Mind you, this is Wednesday. Thursday, the markets may have moved a little bit. I really didn't open up my charts until Friday. So for time's sake, I'm going to move it to the 15-minute. And that way it shows you guys how the candles played out just in a shorter time period. So you guys can actually take a look at it. But I was holding positions. This is right there. I think it was on Wednesday afternoon. Yeah, Wednesday, 2:30. I closed one position right here because I didn't want to hold two positions and then both positions go against me either after Thanksgiving or Friday. So just to be safe, yes, take a partial, close that position. So that position had already been closed. And the reason why I took that is because not that long ago, I was listening to a Twitter space, and it's very true. If you think about it, if you take partials will always pay 100% of the time. Your TP may not get triggered if you take a full position, right? It may not. It may reverse and go straight into your stop loss like it did for me last week. So having learned that lesson, I took one position off right off the top, and it gave me a pretty solid, almost, a 1-to-2. So I was pretty content with that. But to test my skill, I wanted to see if this low was going to get taken out. So I left the original position. So with that being said, let me go ahead and play this out for you guys. May play this a little bit faster for you guys. Let me put it at that may be a little bit too fast. There's another fair value gap right there you could have entered. But this is what it looked like. That was on Thursday, Thanksgiving. You see, So you see for Thanksgiving, it moves very slow, super, super slow. There's no movement whatsoever, right? So Friday, I think is right here, right where it's about to start. Um, that's Friday. And this is where I started paying attention to it. And I wanted to see if that was actually going to hit my take profit, which is what I was posting today. Will it or will it not take profit and hit our target right here at this low and right there? Profit taken right at these lows, taking them out, right? Um, I was really happy to see that trade play out. Um, was I jumping up, screaming and yelling and saying, I did it, I did it? No. Over time, with experience, you kind of expect certain things to happen this way, and it kind of just becomes second nature. The whole excitement of having to hit take profit kind of fades after a while. And from what I've heard, not only from one but multiple profitable traders, is that when trading gets boring, that's how you know you're starting to learn and start to kind of become consistent with your trading habits, right? But this was a pretty solid trade. You could have made a pretty good chunk of change here. I teach on the charts. I don't show live trades or show profits or anything like that. But I'm not against it. So in the future, that could be something that I'm going to be posting here on the channel. But for now, I'm just going to be showing you guys what I'm marking up, and how I would be taking my trades, learning from ICT's concepts, right? So those were Monday's trade, was this one here. And then we have Tuesday, which was a no trade day. Very amazing move, super awesome. It was a really good sell, but it just wasn't within my trading plan time frame, so I did not take that. And then after that, I was not involved in the market. And this was Wednesdays all the way to today, which was Sunday opening. And just to kind of practice, if you guys want to take a look, let's see if we can find the new weekly opening gap from Thanksgiving week to this week. So if you look at this candle right here, it's really easy to see. Like, you don't even have to like really zoom in that much or really do much, right? It's pretty obvious. It kind of sticks out like a sore thumb. But if you look at this candlestick right here, and if you look at the bottom, that's Friday, and then that's Sunday. So what we want to do is, normally I do this on a 1 minute. It just gives me a little bit easier. It's a little bit easier for me, I guess. I hate when that happens. But what you want to do is, this is how I mark up my new weekly opening. Friday, that's still, yeah, Friday. So this candlestick right here, what's the close on that? The close is 16,011. So I usually just draw out a line, coordinates 16,011 right there. And that is the close on Friday, and then we want to get the opening on Sunday. So if you look at the cursor here at the bottom, when I hover over this candlestick, that's Sunday, 6 p.m. That's when market opened on Sunday. And what was the open on that? If we look up here, whenever I hover over it, 16,088. 16,008, which is right there. And that is new weekly gap. So guys, if you want to kind of test this out, try it for yourself. Go into your charts, mark up your new weekly opening gap, give it a shot, and see how. Just test it. Like, if you're new to trading, mark that up and don't do anything with it. Just look at how price reacts to it, right? Right now, we're way down here. I do have a feeling that we may want to go lower, just because we already tapped into that daily volume imbalance and left a pretty huge wick. I don't see price going back up there. But with that being said, if we look a little bit, let me look at the daily without anything here. All right. So this is where we're at now. We already, keep in mind, we already took out this high. So the next high would have been here if we wanted to go higher. So let's see what this week does. Do we want to go higher and take out this high? Or are we going to come lower? Are we going to come up, reject, and then come lower to take out these lows right here and potentially tap into this gap, right? So if you guys want to rock with me, let's take a look at that. I'm going to see if we can take all this off. I'm going to delete everything, give you guys a fresh chart to try and look at on Monday, or sorry, Monday morning. Here in the morning, I'll post it on my Instagram story and kind of see. You can already see I have this like marked up. New weekly opening gap that we just marked is right here. So do we want to come back up, tap into that new weekly opening gap, and then continue lower? Because mind you, there's still positions here that could be taken out. There's this low right here that's a pretty even low right there. And then there's all these lows right there that if you were a buyer, right, you would be using those as your stop loss, because you don't want to be open. If you're a buyer, you're not going to have your stop loss way down here. That's a huge stop loss, right? If you have your stop loss, you're going to put them at those lows. And you saw what happens whenever there's a lot of pretty equal lows right there like that. I have a feeling that we may come back up, tap into new weekly opening gap, and then continue lower to take these lows out, right? That's how I would play it. I don't see this going any higher, but you know, it's more of a probability. If you look at things in probabilities, it's more probable to come down here and take these lows and tap into this gap. I could be wrong, but that is my narrative, I guess you can say, for this week. That is what I would do. I would tap into this new weekly opening gap, potentially even wicking through to take out, you know, these sellers that are over here, and then target these lows, and then kind of see what happens for the rest of the week. So one more thing I kind of want to talk to you guys about, that you guys mentioned you wanted to have a topic on, is trading psychology, right? So not a lot of new traders know about the trading psychology and what's behind it, and you know what's involved, and you know everything like that, because you guys just don't have enough experience just yet. And not to say that, you know, you guys are going to learn a lot, because you can learn a lot. I've been doing this for, like I said, a little over 2.5 years now. I think potentially coming up on 3 years. And it's just like anything. I mean, you can't pressure yourself to absorb and to learn everything, you know, in 2 weeks, a week. There's no cookie cutter method out there. There's no easy method where you can just come into YouTube and say, hey, look, I just want a strategy that's going to make me money and, you know, millions of dollars, and show me how to do it and I'll be able to replicate it. You have to go into this with a, hey, like not always, but I'm going into this fully submitted, knowing that you're going to be a student for a really long time, because these are one of the industries that, yes, it is very, very easy to make 100 grand, to make 6 figures, to live a very wealthy and lavish lifestyle, right? But it's just like any other career that you're going to jump yourself into. You know what I mean? Like, I was going to school to be a nurse, right? And this is completely off topic, but I was going to school to be a nurse, and there's these things that are called clinicals, right? When you're in school, you have to put in your hours. Essentially, what it is it's your hands-on hours that you have to complete in order to receive your certification, right? So, before I can even graduate, think about graduating. I have to go to clinicals and do this hands-on in order for me to even be considered to graduate, right? Um, and that's just so you can gain experience, right? You don't become a doctor and then the next thing you know, you're free to butcher people up and then just tell them how they feel and take whatever they want to take. You can't do that. The same thing with being a pilot. You can't just jump into an aircraft and then expect to know what you're doing just because you watched a 5-minute YouTube video. That just doesn't happen. Yeah, there are people out there that learn quicker than others, and there's some people out there that learn a little bit slower than others, and that's okay. Everybody learns at their own pace. But when it comes to some like a skill like this, that is is very well paid, just like anything, you need to learn and put in the hours first. You need to have the experience. And how do you gain that experience, right? I recommend using a demo. Get yourself Find yourself a broker, a website, something like that. You can even go onto tradingview.com and set up a free account and get yourself a demo account, right? Get yourself a demo account, trade it. Now, once you get good at demo, then I would say look into opening up a broker account, fund it. You can fund the broker that I use. You can start the account with $100. $100, honestly, is not a lot to start with, but it's a start. If you really want to, dip your toes and kind of see what the market is like, what it's like trading, get yourself $100 after you've been trading for a couple of months, after you've been consistently profitable, and build a discipline. Then you can start trading into a live account, right? Because, and why am I going into this topic? Because it has to do a lot with your trading psychology, right? There's going to be things that you experience that you have never experienced. You're going to see fluctuations of money on a screen that you've never seen fluctuate as fast as they move. And you're gonna learn a lot about yourself. You're gonna learn about how disciplined you really are, how motivated you really are, and most importantly, how far are you willing to go and invest the time to become the profitable person you want to become. And it's that simple. When you come into these markets, you can't the market doesn't make you push a button, so you can never blame the market. You can't say, oh man, I lost this trade because the stupid market, or I lost the trade because the market did that, or the market did this. The market has nothing to do with whatever you're doing, or your loss or your wins. The market has no connection to you whatsoever, at all, period. The person pressing the button is the person responsible for the trade. And a lot of people have a problem with that. They aren't honest enough with themselves to know, hey man, you know what? Yeah, I pressed that button. I was trading impulsively and I took a trade I wasn't supposed to take. Simple. And some people can't cope with that. Some people are going to learn a lot about themselves just simply entering a trade. And this is why I say, like, you can't just expect to come onto YouTube or buy somebody's mentorship or I don't sell you guys anything, but for those of you that go out there and you buy mentorships and you buy courses and you buy all this other stuff, and you expect, oh man, because I paid $1,000 for this course, like this is the good one. This is the main strategy that I'm going to use to make millions of dollars. You know what? If you do, man, I'm proud of you. because you stuck with it. Not because you bought the program, not because you bought the course and spent the money, but because you stuck with one strategy and you grinded that strategy out. You really put it to work. You back tested it. You tested it for a couple of months. You followed the rules. You were disciplined and you made it work. There's multiple strategies out there. But like what I'm trying to get you to understand is yes, there's hundreds of strategies out there, right? Not one single strategy is perfect. What you have to learn is about yourself. You have to learn how to manage yourself, follow the rules, be disciplined, find a time, find a strategy and stick to it, back test it, figure it out. Like it doesn't come easy. If this market can make you or break you. If you stick with it, you'll be very profitable and believe me, you're going to make a lot of money because in trading, you can make as little as $10 a trade, or you can make as much as, if I'm being real with you, I think I've seen traders make up to $500 to $700. I mean, sorry, 500 to $700,000 in a single trade. Please, please tell me what other skill or career can you find out there at this moment that will pay you $500,000 to press a button? And you don't even have to be stuck on the screen all day. I trade 1 hour a day. My goal is to show you guys that if you really put in the work and if you really become consistent and you really put in the work and the hours, you can make this a career. You can make this your source of income. But you have to know that it's not going to come overnight. You're going to have to put in the hours. You're going to put in the work, write your notes, journal your trades, whether it's on a notepad, whether it's on TradingView, whether it's digitally, whatever it is, make it a habit to journal. When you start journaling, you'll start seeing price move differently. You'll start learning about yourself. Write down how you felt when you took that trade. What was your thought process? What did you expect to happen beforehand? What did you expect to happen after? Make it very simple, but detailed. Simple, but detailed. How you felt that day. Was there anything going on outside of, your trading life? Because that's another thing. And this is for a whole nother complete different video, but whatever you have going on outside of your trading screen and like your personal life and everything like that, that affects your trading psychology. That affects the chemicals in your brain. That affects all that. Yes, I'm a big believer in, manifestation and what you believe and everything like that. We're not going to get into all that, but maybe we will. But that's for another trading psychology, episode. But everything that is happening to you in your personal life will affect you in your trading career, or whatever you're trading that day. If you had a bad day the day before yesterday, if you broke up with your girlfriend, if your boyfriend broke up with you, you had a loss in the family, something tragic or something like that happened, you're not going to be thinking clearly. So at that point, I would just say close the charts and, give it some time. But if you guys like the trading psychology topics that we're having today, please leave a comment below. I really want to see what you guys think. I know this channel is not as huge as what you guys would expect it to be, but if it's helping someone out there, man, give me a like, leave a comment below. Let me know what kind of topics you guys want to talk about. I'm going to be incorporating a little bit more of trading psychology into my videos. It may be integrated within the video of the trading week, or it may be a whole different series apart from the weekly review videos, right? But please leave a comment below if you guys want to have new topics come up. The next topic that I want to talk about and bring up is going to be the basics of trading. I don't know what kind of audience I have right now at the moment, but I would really love to know what age groups and things like that, like how long you guys have been trading, um, where you're at in your career. Did you just start? You know, are you 3 years plus in? Let me know, guys. But as far as this week, like I said, let's see how NWOG is going to be reacting to the price for the next couple of days. Follow my Instagram. If you guys want to go follow my Instagram is Adrian, ADRIAN .14NK. I can go ahead and leave a little text box here for you guys to take a look at. It's Adrian. Sorry, that's wrong. Adrian dot 14NK. That is my Instagram. I post what I'm thinking about that morning, my trading analysis and everything like that, what I want, what I would like to see price do and everything like that. So if you guys want to follow me more on a deeper, more kind of like connected way, where you guys can reach me a little bit quicker, go to my Instagram. I'm on that thing every single morning. I post a good morning every single day, try to motivate you guys to keep going. So if you guys want to follow me, my Instagram is right here. But like I said, any new topics you guys want to talk about, send me a message on Instagram or comment below. And hope you guys are learning something. So let's have a profitable week. See you guys later.